Welcome to Early Age Club. We are a small cohort of serious microcap investors. Every month, we deep dive into two microcap stock chosen by the community. We are keeping this group small intentionally to preserve the quality of discussion and make a real personal connection. If that sounds like the kind you want to be part of, fill out the short form linked in the description and we will reach out to you soon. Today's section is divided into understanding first the business model, the industry, and then we use our 20-factor scoring, and finally our take on valuations and risk. Just to be clear, this is not an investment advice. Our goal is to help you invest smarter and safer and not tell you what to buy.
So today we are going to take a deep dive into Izmo Limited. So Izmo Limited is a global leader in automotive digital retail, interactive media, and AI-driven analytics, serving clients across North America, Europe, and Asia. With proprietary platforms like Izmo.ai and Frog Data and a growing semiconductor arm, it delivers scalable software as a service solutions, immersive content, and niche high-margin chip technologies. Company operates across three software divisions. One is Izmo Studio, which is an interactive media solution application. Two is Izmo Auto, a digital retail and CRM platform. And three is Frog Data, which is an AI and data intelligence platform. Coming to the revenue bifurcation, so by business division, 4% of the revenue comes from the new arm, which is the Izmo Microsystems, 30% from Izmo Cars, 36% from Izmo Studio, and 30% from Frog Data. Based on geography, 72% of the revenue comes from North America, which is very high concentration, 17% from Europe, and 11% from India. Now, the rationale behind their high export-driven revenue is that their products are directly targeted at tier 1 and tier 2 cities where people have higher spending capacity. So that's why they're primarily focused on America and European Union. Coming to the top customers, so there they are quite diversified. Their top few customers contribute around 10 to 12% of their revenue, with Stellantis and U France contributing 5%, Cox Auto contributing 2%, Add-on Auto contributing 5%, and Hertz Europe contributing 1%, and others contribute around 87% of their revenues. Some of their marquee clients include Sony, Ford, Honda, Porsche, Renault, Fiat, Microsoft, Suzuki, and Toyota, etc. So coming to their business overview, so we'll come across all of these segments one by one. So coming to Izmo Cars, so it's a multilingual web platform for automotive purposes. So they have got a proprietary automotive web platform for tier 1 and tier 2 clients, and are the largest provider in France with more than 2,000 dealers worldwide using Izmo solutions. Their clients mainly include OEM networks and large and small dealer groups. They have a new platform called Izmo.ai, which is an AI-based marketing platform focusing on data aggregation, pricing tools, and intelligent customer targeting. And it helps with analytics-driven media marketing. They've got also another segment, which is the Parts Velocity CRM. So it's a software as a service based parts distribution, sales and marketing CRM, which is integrated with major DMS systems. It has got a PSA alliance with a POGOD standard for distributors, and it is a comprehensive platform for parts distribution management with all major DMS systems in Europe. Coming to Izmo Studios, so Izmo Studios has three segments. One is Izmo Stock, which is a global automotive image library and is number one in automotive stock images. And it has got a tier 1 client list with just 2% client churn. Then comes Izmo FX, which is a CGI development services with 3D virtual showroom with accessories. And it has got Kinetic CGI, which is an interactive product experience platform. Then comes Izmo VR, which is an automotive VR platform, and Izmo VR is a lead generation kiosk which provides virtual reality experience apps. Coming to Frog Data, so Frog Data also has three verticals. One is Frog AI Plus, which is a decision analytics platform which is integrated with major DMS systems. It provides many systems and one dashboard where the people get services of DMS, CRM, Google, and others. Also, it is focused primarily on auto retail. Then comes Frog Data Lake, which is a data repository for AI. It has seamless integration with any system, managed pipelines for data migration, and single normalized repository for all data. Coming to Frog AI Factory, so it's a auto GPT for next generation apps and automations for dealers. It provides AI based warranty rate analysis in the name of Warranty Boost Plus and AI based warranty claim processing through Warranty Mind. It also has AI driven used cars pricing engine called AutoMinds. Now coming to other key products and services, so Izmo Emporio, which is a 3D CAGI virtual showdown, has got high user engagement and a conversion rate of higher than 90%. It has increased online sales and its content is available for all countries with unique products with no competition at all, and has got a one-line integration with any dealer website at low cost and high volume protection capacity. Then comes Izmo VR, which we already discussed. So it provides virtual car test drives, and it is innovative and immersive user experience and one of the largest content libraries in the world being repurposed for VR. Also, their purpose is to build content, distribute and monetize, and it is easy to scale in any country and has potential to launch in App Store for private viewing. So it facilitates better lead generation for sales. Now coming to Izmo Microsystems, so there is the semiconductor arm which is quite new. Now its focus is on specializing in system in package semiconductor packaging, and the target industries include customer electronics, automotive, telecom, and green energy. Their core capabilities include 3D die stacking, fine pitch wire bonding, class 1000 clean room, RFMW packaging, power modules, and co-packaged optics. Some of the key differentiators include advanced packaging solution for compact high-performance system, in-house design and manufacturing integration, and focus on energy efficiency and next-generation chip solutions. They have got strategic partnerships with IIT Madras and are focusing on programmable photonic processors and quantum and microwave photonics. So this is their management team with Mr. Sanjay Soni as the managing director with multiple years of experience and a very good track record. Also, they have a SBU based organizational structure where the tranches are broken down into countries with one forming USA, another France, and another India. Now coming to the R&D team, so they've got a very strong R&D team which has developed multiple CGI technologies for automotive using on-site laser scanning and AI-based model processing. They've also developed AI big data platform for decision analytics based on integrated data models with heuristic algorithms for quick analysis. And they've also developed used car price optimization, which we already discussed. Now coming to the segmental revenues, so Izmo Cars revenue growth is quite robust on a quarter-on-quarter basis. Also, it has shown decent growth. Same for Izmo Studio, Izmomicro, as well as Frog Data. Now coming to the quarterly financial highlight, so there have been revenue growth which is driven by robust new client additions in US and Europe. As you can see, revenue year on year grew by 18.94%. Also, there has been a new synergy which came from Geronimo acquisition, which has been kicking in recently. And also, Frog Data and Izmomicro continues to gain traction. As a result, their profit after tax on a year-on-year quarterly basis increased by 23.77%. So coming to the annual highlights, so they've got strong demand from new clients in US and Europe markets, and they've got significant investment in skilled workforce and marketing, which impacted their margins a bit this year. And also they've got a strong uptake in Frog Data and Izmomicro, and they're highly bullish on that. So coming to the annual highlight, so the revenue has grown very well over the past few years. So has been the PAT. As we can see, PAT margins have been improving on a year-on-year basis very nicely. Since last year, PAT margin grew by 7 to 8%. Also, basic EPS has also increases. However, the EBITDA margin took a bit of a decline. This happened because of increased cost based on their expansion plans. Coming to the key strengths, so they are the only multinational and multilingual digital retail platform for auto. They've got unique and innovative product and service offerings, and have got strong R&D initiatives there. Also, their highly profitable SaaS platform with annual recurring revenue model adds up to the list of strengths. And they've got a proprietary methodology and process for CGI products and VR platform with strong reputation and brand image across customers. And their growth is driven by surge in online retail for automotive. And they've got a experienced leadership with deep domain expertise to leverage all these capabilities. Coming to the industry overview, so their business software market, so global business software and service market was valued at 390 billion in 2020 and is forecasted to grow at a CAGR of 11.3% during 2021 to 2028. Also, the global digital marketing sector is valued at 321 billion, which is expected to reach 366 billion in 2023, growing at 14%, and is expected to reach 671 billion in by 2028. And mobile ad expenditure contributes to 39 to 42% of digital spends in the Western European markets such as UK, Germany, Spain, and is expected to grow at 55 to 60%. Now, coming to the automotive dealer markets, here the management mentions about why they have a very good marketing opportunity, especially outside India. So, this is because the base platform billing per dealer is around $1,500 to $1,200 per month, out of adding to which they have consulting and derivative products, which a total up to $3,500 per month subscription, and they have got a market size of $840 million. So, there's high potential for growth. Also, they have highlighted the auto dealer industry size, which is around more than $1 trillion in sales revenue, with more than 20,000 car dealers. An average dealership does $60 million sales per year and employs 100 people. So, monthly marketing spends is around $600 per car, which is around $60,000 per month. So, their $3,500 per month subscription looks quite less as compared to the 60,000 per month marketing spend. Coming to the global trends and US automotive sector, so there is strong growth in online auto retail and interactive media content is gaining popularity very fast. Also, online spends by auto dealers on rise with consumers demanding better content before buying decision, and very few players are offering interactive media content for any kind of automotive services. So there are total 60,682 dealerships in US auto sector, out of which total advertisement spend sums up to $9.2 billion, with advertisement budget per vehicle around $640, and there is sales of around $1.2 trillion, out of which online spends is around 56% of total. So average annual internet spend per dealer is around $310,000. So that's quite high. So, summarizing all the industry overview factors, so we can conclude the following statements. The global automotive retail industry is undergoing a digital transformation with dealers shifting to online first sales and marketing models. Rising adoption of AI, data analytics, and VR is enhancing dealer productivity with targeting consumers and high engagement. Also, automotive e-commerce is expanding in both developed and emerging markets, driven by consumer preferences for convenience and transparency, and high quality interactive media content is becoming a key differentiator in automotive marketing. Also, European and North American markets remain the most lucrative for premium automotive SaaS and content solutions. The global auto dealers are also consolidating technology vendors, creating opportunities for full stack software as a service providers with multi country capabilities. Now, here comes the way ahead as guided by the management. So, they are expanding data repository and auto dealer subscription with focus on updating repository of data with latest and state of the art imagery and information. And focus on new products in existing geographies is also a priority with Izmo VR, Izmo AI, and EVSW, which is software for electric vehicles and mobility solutions. Dedicated R&D efforts is to be supported by strong sales and service network. And then comes Izmo Microsystems, which is also expected to grow really well. And they're also focusing on growing existing products in existing geographics like Izmo Studio, Izmo Cars, and Frog Data. And their focus is also on existing products in new geographics like Izmo Auto is to be reintroduced in USA, and full suite digital solutions to be explored in Germany, Spain, and Switzerland. Now comes the Concall highlights. So we already discussed the three software divisions. So the management emphasizes innovation as their key moat, leveraging deep automotive domain expertise. And their diversified subsidiary Izmo Microsystems is targeting niche high value SIP solutions. And semiconductor vertical is expected to reach 200 crore revenue in 3 years, and break even is targeting at in FY26 with growing PAT from Q3 onwards. Frog Data AI analytics platform is seeing steady adoption, and internal FY26 revenue target is around 100 crores. An acquisition of Geronimo Web in UK is also creating tractions due to high synergy, and FY26 revenue target is around 3 million euros. So Geronimo Web is basically a digital marketing solutions platform. So the FY26 overall revenue growth guidance is 25 to 30%, with EBITDA margin improving to 35 to 40% as new businesses contribute highly. Photonics chip project with IIT Madras is aimed to launch first product, which is a quantum random number generator, which has got huge banking applications, is in Q3 FY26. Current semiconductor order book is at 25 crore, and product level margins are estimated at 60 to 70%. And there is no Indian competitors in 3D SiP packaging, and the global competition is limited to a few countries. Also, they've got strong tax shields in US, European markets to keep effective tax rate low till 20 to 30. And they have capex planned at 5 to 7 crores, mostly for tech upgrades and cash reserves, and are retained for growing inorganically as well as organically. Coming to the bull case scenario, so they've got a strong global presence with 72% revenue from North America, and a robust client additions ensure their diversified growth. Also, proprietary platforms like Izmo.ai, Frog Data, and virtual showroom products offer scalable recurring revenue streams. And semiconductor venture Izmomicro has high margin potential and has limited competition in 3D SiP packaging. Strategic acquisitions like Geronimo Web will accelerate marketing penetration in Europe, and high client retention rate around 98.5% provides revenue stability. Also, strong R&D spend support their innovation-led growth. Coming to the bear case scenario, so there's high dependency on North American markets, which exposes the company to regional economic downturns. Automotive sector cyclicality could impact dealer spending on digital solutions, and semiconductor venture requires significant upfront investment with uncertain ramp-up timelines, which can also cause trouble. Also, competitive pressures from global software as a service and automotive content providers could erode their market share. Also, currency fluctuation could also impact earnings given large overseas revenue base. Coming to the 20 factor scorecard, so they issued warrants worth 12 crore to promoters in FY24, which have been fully exercised. So I give them a 5 out of 5 there. Also, they've got a very good director and promoter track record, so I'm going to give them a 5 out of 5 here as well. Their Sony family holds around 35% of the company. Coming to related party transactions, there are minor transactions with promoter control entities, which are not big enough to quote, so I'm going to give them a 5 out of 5 here. Regarding board independence and composition, so number of directors is 6, number of independent 3, and family on board is 3. So there is 50-50 independent director and family shared in the board. So I'm going to give them a 5 out of 5 here because there is a decent balance. CU and KMP salary is just 0.5% of revenue, which is quite less. So I'm going to give them a 5 here. Key person resignations are not quite significant, but there have been consequent company secretary resignations in 2023 and then again in 2024. Because of this, I'm going to pessimistically give them a 3 out of 5 here. Auditor resignation and change haven't been any. So the current auditor has a tenure till 2027. So I'm going to give them a 5 here. Auditor opinion has been unmodified over the past 3 years. And regarding regulatory or legal issues, so they've got a bad 3.3 rating in ambition box rated by their employees. So all the employees think the management is not quite great. Also, there have been some discrepancies in diversification plans and disclosures in filings to SEBI, because of which I'm going to give them a 3 out of 5 here. The company has all their investor communications and disclosures available, so I'm going to give them a 5 out of 5 here. Regarding business concentration risks, so they're quite diversified in their business segments, and top companies like Sony, Ford, Avis, Toyota, Honda, Nissan, Microsoft, Renault, and Fiat are their customers. However, due to their strong concentration in North America, I'm going to give them a 3 out of 5 here. Regarding CFO by EBITDA, so there has been a sharp decline since the last few years. This happened because of high receivables, which is quite bothering. So I'm going to give them a 3 here. Regarding revenue growth versus receivables, as I mentioned, the receivables are growing at a very high rate. As we can see, it's growing almost 4 times the rate of the revenue growth, and receivables as a percentage of revenue is 44%. So on account of this, I'm going to give them a 0 here. Regarding DSO, so DSO is quite high. This happened because the receivables are high, so I'm going to give them a 3 here as well. Cash conversion cycle is also high at 118 days because of the same reason, so I'm going to give them a 3 here as well. Capex expenditure has been 15% of revenue, which is on the highest side. Fixed asset turnover is good. Asset turnover is decent. And return on asset invested capital is also quite good and has improved since last few years. So I'm going to give them a 5 here. Debt, they're debt free. So debt to equity ratio is 0. Interest coverage is 54, which is very high. So I'm going to give them a 5 here. Liquidity position is very good with quick ratio and current ratio both at 1.7. So I'm going to give them a 5 here. Return on equity, return on capital employed, and return on asset metrics are quite good, and they have been increasing year on year for the past few years. I am going to give them a 5 here. Regarding growth consistency, so revenue has been growing really well. However, the PAT growth has been much higher than the revenue growth, which is also good. The company is improving their margins. So I'm going to give them a 5 out of 5 here as well. So their final score comes out to 46 out of 15 governance and promoter behavior and 37 out of 15 financial health, taking their total score to 83 out of 100. Now coming to the valuation analysis.
Yeah, regarding ROE, ROC, I think it's only been good this year. Otherwise, it was up 10, which is very abysmal. So it's very low for a company that is having such a good product as they claim. I think one of the reason is they're trying to invest in a lot of things. Like for example, they invested in huge precision manufacturing in 2016. This was for defense or something was mentioned. So I don't know why.
Yeah, then the
So it's
CUT disclosure requirement issue was regarding to huge precision manufacturing only. And they are buying it from their
yeah.
own promoters, so that their valuation needs to be monitored as well.
Yeah. So again, this is like for defense equipment. Why would this company, what is their role in defense equipment? And also semiconductor is like some completely unrelated area or diversification. So capital allocation is something I have a big doubt with this company. Regarding PE, the PE is 11. Don't go with the P because this year there has been some, there is the other income component of 30 crores or something. So because there's a other income of 35 crores. So just don't go with the PE. This is pulling the PE down. Otherwise the PE would be around 20. But any which case, the best case and worst case is if you have a 1 year target, let's take 264 on a conservative basis, and let's just, because they're doing heavy capex, let's just take 17 as the operating margin and the price to earning of maybe 15, I would say. Yeah, the price target comes to 623 if the PE is 15. The price currently is 379. So there's some growth. There is good potential for re-rating if the growth sustains, even the worst case scenario, and the margin is maintained. So that is interesting. But the growth over the last couple of quarters have slowed down. So please kindly monitor that, is what I would say. So they have good gross margin, but when it comes to operating margin, falls down a lot. But yeah, the management also claims they do a lot of R&D research, etc. And they're targeting around 500 crores of revenue by FY 28-29. So almost more than doubling from here. So that's around 25 to 30% CAGR. So let's see if we have a 5-year view, what is the growth. And the earnings is 2, which is the free cash flow. The cash flow from operating activities is 4, and the profit after tax, net profit. Okay, this as an exceptional item. So we'll just take a minus around 30. So we'll just take 20 crores to conservative. So taking 20 and the required rate of return of 25, I find this as a very high risk bet, and a time period as 5 years and 15 PE multiple at the end of the term. So implied growth rate has to be 34-35%.
if you're entering at this current price to justify the valuation, and if your return expectation is 25, but if it is 20%, then obviously it falls down to 29. And again, it also depends on what PE you're giving, etc. But then overall, between around 30 to 35 is the return expectation, I would say. And if the company is for 500 crores by FY28, then 30% is something they have to grow at. So let's see whether they achieve that. Yeah, off late, but then his off late, like since COVID, they have been just growing at around 20%. So a bit of aggressive target, but then yeah, there are a few interesting optionality they have come up with, especially with the semiconductor product, etc. Yeah. Any final thoughts?
They seem to be a decent company, but their latest diversification has to be taken with a pinch of salt. There is high execution risk there.
Yeah. Yeah, so a more in-depth level of analysis needs into different verticals and the management track record. They have been listed for quite some time. So you have a bit of data to the promoters as well and the thinking behind it. So yeah.
I hope you found this framework useful. If you follow this company or have any interesting insight, we would love to hear from you. Drop a comment below. If you have scored this company using our 20-factor scorecard, feel free to share your score and how it compares with ours. If you found this useful, consider subscribing and also check out other videos where we break down more microcap companies and SME companies. If you are interested in joining our small research first cohort, the link to apply is in the description below. Thank you for watching and we will see you in the next one. Bye-bye.